Adcorp's latest employment stats show that South Africa's formal sector shared just over 14,300 jobs in August. Overall, Adcorp says its employment index fell at an annualized rate of 0.23% last month, and that South Africa faces a very real prospect of job recession. Loane Sharp is Adcorp's labor economist. Loane, thank you so much again for coming through.
Thank you.
Now, Loane, let's talk about this rather somber phrase that you've spoken about, job climate, referring to a very real prospect of a jobs recession. That's rather disheartening for particularly job seekers out there.
Yes, very much so. Technically, a jobs recession is 6 consecutive months of declines or stalling in employment. We've had 4 of those 6 months so far. So we're 70% along the path toward a jobs recession. It's very hard to see the employment outlook improve. Not only do we have the kind of uncertainties internationally that make employers reluctant to add to their workforces, also the domestic economy seems to have slowed down to the point that many economists are forecasting a rate cut still this year. At the same time, in the labour market specifically, we've got a raft of new labour laws and regulations, and they're currently before Parliament. They will probably be approved within the next few months. I think many employers are waiting to see what the impact will be of those laws before they add any hiring.
But if you look at the employment index, it fell 0.23%, as I mentioned in my intro, but it's a better reading compared to the months of May and June.
Yes, that's true. And in fact, there are some bright sectors in the economy. During August, we saw employment in the services sector pick up quite sharply, which is to say retail trade, financial services, personal services, and also transport and logistics. The primary and secondary sectors have been relatively weak. Mining for the last 3 months and manufacturing for the last 6 months have showed declines in employment. So what we're seeing now is the effect of international economic weakness affecting our export-oriented sectors. The domestic economy still is doing reasonably well. Growth forecasts reduced but not slashed. But it's difficult to see how the kind of growth that people are looking for is going to translate into jobs.
Talking about those sectors, manufacturing, mining, construction, those have shared 16,000 jobs. Then you look at the services sector that have shared 14,000. Are we seeing a rebalancing of some sort? And is it not something that we would welcome if that was the case? For example, China is, arguments that maybe they need to start rebalancing from that labor-intensive sector to a more consumer-driven sector. Won't that help us?
Well, the structure of the economy is definitely changing, and the structure of the labor market is changing. I mean, one of the important shifts that we've observed is during the month of August a shift away from permanent employees, including in-house temporary employees, toward agency work, as many employers outsource their labor relations risks. So there definitely are in the labor market that are growing quite strongly. There's also a strong reorientation of the economy toward the services sector. I don't think that is necessarily a long-term trend. I think if we look at consumption patterns for the emerging black middle class, really the number of people who've joined the black middle class is just staggering over the last 10 years. 10 years ago, only 200,000 black people earned more than the average white. Today, 1.6 million black people earn more than the average white. So there's been an absolutely tremendous increase in black incomes, and that will fuel a whole new kind of growth in the economy, certainly of a consumption-oriented nature. And it means that we shouldn't be afraid of consumption in the way that perhaps we were in the past, when consumption was based on a very narrow part of the population.
Okay, so the informal sector now, let's go there. Is continuing to grow at more or less, I suppose, the same momentum. But surely then, if you're talking about that possibility of a jobs recession, if we continue to grow the informal sector at these rates, we can shield ourselves from a jobs recession, right?
Well, that's a very good point. I mean, what we're talking about in terms of recession is only in the formal sector, but the informal sector is growing very buoyantly. Unfortunately, the reason why the informal sector is growing so strongly is to avoid taxes and avoid labor laws. So really our regulatory regime, being taxes and labor laws and regulations, is creating an unfavorable climate to employment and business activity. So more and more businesses are appearing in the informal sector. I expect that this will continue. I mean, there's not going to be any material reversal of our tax regime or our labor law regime. So the informal sector, yes, is a great hope for the economy. But there are problems with the informal sector. Workers don't receive benefits, they don't pay taxes, they don't comply with health and safety laws, etc., etc. In fact, it's exactly to avoid those laws that these businesses are appearing in the informal sector. So it's not the best kind of employment.
Now, last time you mentioned that South African business executives' inability to dismiss or even threaten workers who are not performing satisfactorily is holding back, the country's productivity. Is that still the case?
Yeah, I think it is. The World Economic Forum released its Global Competitiveness Report for 2012 on Friday. And it was absolutely fascinating to me to read the labor market rankings within that, because South Africa on the whole is fairly competitive, but our labor market is absolutely horrendous. I mean, labor-employer conflict, we rank the worst of 144 countries in the world. The flexibility of our wage regime, we rank the 4th worst in the world. And so and on. I mean, our labor market rankings in the world are really absolutely out of sync.
Who's responsible for that?
Well, I think there's a general ideology within government that views businesses and employers with suspicion. And I think that ideology is propelled forward by the alliance with COSATU. So that government's battles are union battles and vice versa. So there's a very strong anti-business stigma within government circles, which is why even in the midst of potentially a jobs recession, government is ignoring all of the risks and really introducing a whole new set of labor laws. So pay and productivity is one of the worst rankings in our labor market rankings. And so long as pay reflects the cost of living rather than incentives to perform, we're not going to get any material increase in employment.
That performance, you will see a disparity between, the private sector and the public sector. So somebody's doing right, because I think there was a labor market navigator that came out, and you saw that the private sector is performing 450% much better than the public sector. So the private sector is doing something right there.
We've really got two economies. I mean, there's the public sector, which is in a state of really total collapse. There's not a single public service that isn't in one way or another malfunctioning, from the education system to the police system to the courts and so on and so forth. Whereas our private sector is in very good shape. One of the things from the Global Competitiveness Report is that our management in South Africa ranks 13th best in the world. And that's because many of our managers are CAs by training, others are not, but that tends to be the primary qualification for chief executives in South Africa. So high levels of financial numeracy, high levels of ability in our managers. So the private sector is doing incredibly well, but government is doing badly, especially management within government. I mean, we've seen an alarming trend over the last few years that strikes are initiated in the public sector, not so much because of pay disputes, but because of issues with government managers and the management of their workforces.
And we'll leave it at that. Thank you so much, Loane.
Thanks, Candy.
All right, that was Loane Sharp, and he's Adcorp's labor economist.